Hi, guys, and welcome to Tickers from the Limitless Podcast. This is a series where we review listed companies on the Jamaica Stock Exchange. I'm Matthew.
And I'm Thaon.
And today we'll be talking about general accident insurance, ticker as GENAC. But before we get into the video, we would love if you guys could subscribe. On YouTube, we are trying to reach 1,000 subscribers by the end of 2024. Also, if you're listening, you can follow us on your podcast platform of choice, Apple Podcasts, Spotify. It really means a lot to us. And without further ado, let's get into it. How are you feeling about this one, Thaon?
I think it's a mixed bag because for me there are a lot of opportunities with GENAC. However, I don't know if it's as popular of a stock as maybe like Dollar that we just recorded a while ago and so on. So it's a mixed bag for me, but I think the people will love it. I think people will literally love this episode.
Okay, let's go.
Let's do it. Are you a fan of insurance companies?
In terms of like the stock or like insurance, I mean, I haven't had any. I wouldn't say I've had issues. I mean, I have insurance. You have to have it in certain ways. I don't really have any issues with my. Yeah, where you're supposed to have it. But I mean, as a stock, I mean, it makes sense because, like, well, I want to get into it. So, general accident or GENAC. One of the things, it's an insurance company, but I wanted to go into some stuff about insurance that I learned. So people be like, okay, how does insurance really work? Right. So there's a few terms I was trying to define. There's the premium, the claim, and the reinsurance. So essentially, premium is what you, the customer, pays the insurance company. So you say, okay, like we said the example of car insurance. Your car insurance premium is how much you pay to the company to insure you. And there's usually an amount that they will insure you for. So you could be paying, say, $50,000, say once a year or twice a year for your insurance. So if it's twice a year, $50,000, you're paying $100,000. And they say, in the event that there is some sort of accident, depending on the types of the insurance, we are willing to pay you this amount to cover that cost. So we are willing to pay you $200,000 to cover, say, something happened to the car, you need a part, or you get into an accident, you have to fix up this. We are willing to pay you that. So on the insurance company side, that's how they would get the claims. So the claim is people claiming the insurance to say, hey, I was paying the premium. This thing happened that we said should trigger the payout. And so the insurance company then has to pay you out or should pay you out. So they do their due diligence. They'll do their assessment. They'll say, okay, like I remember a few years ago, my mom's car was actually stolen. And the insurance company actually like came to the house and like asked us certain questions about what happened and things like that. So they do their analysis and they say, okay, we are going to pay the claim, because technically people sometimes, there are people who could fake that their car gets stolen to try to get the money because they're saying, hey, maybe the insurance value is more than I could sell the car at, or I would just like that cash quickly. I can fake that, and then, so the claim is what the insurance company.
There's a video on Twitter of people doing that where they would access. So basically, the person drove in front of this pickup and then stopped immediately. Right, tried to get an accident so they could get the insurance payout or so on, and they slammed on their brakes immediately. Brake checked the pickup driver. Pickup driver stopped too. Right, so there was a decent distance. Then the person in front of them dropped the car in reverse, and slammed straight into the pickup truck. And then you see like 3-4 people come out and start videoing, and they're like, "What happened? What the hell happened?" And then this one guy noticed that the pickup driver had a dash cam, and that's when he knew he messed up because the dash cam recorded everything. So no way you get in that. So I've seen a lot of like that kind of stuff. Insurance, is it fraud or so on? Yeah.
Damn. Yeah. So with the premiums versus the claims, and then you have reinsurance, which is essentially insurance for insurance companies. So GENAC, it is a company listed on Jamaica Stock Exchange, but in the global world of insurance, it's a tiny company. There are
Yeah.
companies that are 100 times, maybe even 1,000 times the size of GENAC. And so you can imagine that if GENAC says insurance for cars and whatever types we'll get it to, there's a chance that people could claim the money. So say a lot of people get into accidents or there's some hurricane, it damages a lot of cars, and that was a part of the insurance that if there is hurricane damage from a tree, from water, whatever, we will pay you a certain value. A lot of people were to claim the money at a certain time, GNAC could then have issues having to pay that. So reinsurance is insurance for the insurance company. So GNAC essentially has some insurance on some of their insurance policies to help them in the event of these payouts. So a lot of insurance companies do it. I guess I don't really know how high up the, you can imagine that every company, like, okay, say there's a GNAC and then there's a company that's maybe 5 times the size of GNAC who then insures GNAC. Then maybe that company itself, who's an insurance company, could then get reinsurance from someone else. But that's kind of how I guess the insurance industry works. And the key part is that so they take the premiums that you pay, and I mean at the end of the day, you hope that the event that you're insuring the person for won't happen. So you hope that they won't have this car accident or this machine won't go down. But there is an analysis that you do to see the likelihood of that happening. So they involve, like, that involves a lot of math, actuaries, and other types of insurance, like life insurance. They do a whole analysis. They look into things like your family history, the conditions you have, your age, to predict the likelihood that you're going to die, things like that. And they work out, okay, there's a math analysis they do to say, okay, this is how much you should pay. But essentially, the money that they collect, insurance companies, they invest it. So they invest just like you and us. They invest in stocks, they invest in bonds, they invest in all kind of different asset classes. And that's essentially what they do. Like that, in the money that they take that they don't have to pay out, they invest it, and that money grows. And I'll show it in a sense, like you can see GENAC how much they actually make from their investments. But I mean, even someone that people love, Warren Buffett, he's very big on insurance. That's how his company Berkshire Hathaway made a lot of their money. It was from insurance. And they, like, for example, Geico, everyone knows Geico. They own Geico. They wholly own Geico, I think. So because he says, okay, what you can do, I'm the best investor in the world based on my track record. What I'll do is just, you give me the money, and I'll buy whatever stocks or whatever things I think are undervalued, and then I'll get the return and then pay out. You need to, some people cover a claim or ask for a claim. Okay, I'll pay them out. And yeah, generate return on the investment. So that's really essentially how the insurance, or my understanding of how the insurance business works. And GNAC is in that business. And another thing too is that with insurance, there is generally 2 categories: general insurance and life insurance. So GNAC is in general insurance, but specifically non-health general insurance, because under general insurance, you can have health insurance and then every other things. So they're not in life insurance, they're not in health insurance, they're specifically in, I guess you said, non-health general insurance. So these are things like motor insurance. So they are very, very big in motor insurance. It's like 80+% of their business. So motor vehicle insurance, that's really their business. They also have liability insurance. Liability insurance, how I understood it, different from, so it's funny. So there's actually a type of insurance called general accident insurance. So remember, we're talking about general accident as a company, or GNAC as a company.
Yes.
But general accident insurance is only a very small portion of their business. It's like 3% or even less. So how I understood liability insurance versus general accident insurance. Liability insurance is for like a third party or someone else. So I was thinking, say you are an employer and you're a worker, say it's like a factory or something like that, and then your worker could get harmed on the property. That could be a liability to you, because if he's harmed on the job and maybe it was related to some issue with how the machine was working or whatever, you have to pay that. May have to do that payout to the person. That would be liability insurance. But then general accident insurance is more to you, the person, like to say, hey, this is for you. Like, say you're a surgeon and you make money by using your hands, by doing the surgeries. So if you ever were to break your hands or anything related to that, you can't work.
Dr. Stone.
So maybe Dr.
Dr.
Strange.
Strange,
Strange.
sorry.
Yeah,
Dr. Strange,
Strange.
yeah.
He was a what,
He had his
neurosurgeon?
hands insured. Yeah.
He had his hands.
Was he
Oh, he
near?
did.
Yeah. Just like, Ben Carson. Ben Carson had his hands insured too.
Yeah, so my
Yeah.
understanding was
He
the
was a
general
neurosurgeon.
accident. The general accident would be more related to you. Like if you were to get harmed. They also are into fire insurance. I mean, straightforward fire damage and stuff like that. Marine insurance, if you have like a boat, ships, those kind of stuff. And also engineering insurance. So I saw like examples of that could be, say you're like a Wisinko, or makes sense, like a Separad maybe. I don't know if Separad they actually insure Separad, but say you're a Separad, you have some machines that you just built up, you're expanding, and then the machines break down. You can't manufacture any supplygen for like a weeks, and you're losing money on that, right? You're making less revenue. So it's like you could have insurance to cover the fixing of the machine, and also maybe even sometimes the revenue that you could lose from that machine being down. Like you could do an estimate like, oh, we were on track to do this, so help me pay out this. So there's lots of different types of insurance, but the main focus is really their main focus is really motor insurance and liability insurance. That's their thing. They are also in multiple countries. So they're mostly based in Jamaica. Jamaica is like almost like 80% of their revenues. They're also in Trinidad. They had actually bought an insurance company called Motor One in 2019. They bought a stake in there. They actually then increased their stake a few years later. And Trinidad isn't very big for them right now, but right now I think it's 15% or so of the revenues. And they're also in Barbados. Went into Barbados right in the beginning of COVID, really, April 2020. But that's a smaller portion of their business. That's about 6% of the business. But they're mainly in Jamaica, but they are, I guess, diversified in other economies too. They are pretty bullish on Barbados and Trinidad also. And I think when they bought Motor One, the Trinidad insurance company, I think it was actually not profitable, but I think they've actually been able to turn it around too. So yeah, they seem to know how to run insurance businesses. And I did mention before that generally with insurance, you take the money, the premiums, and whatever claims come out, you pay that. But whatever is left after, once you pay your other fees and other stuff and whatever, you try to invest that money. And so GENAC actually has stock in a stock account. Like they invest I saw a valuation at the time saying it was $1 billion Jamaican dollars worth of stock investments on the Jamaica Stock Exchange. So they are actually in, let me share my screen. They're actually in some top 10s on the Jamaica Stock Exchange of some companies that we know. So they're the fourth largest shareholder in Stanley Motor. They have 500 million of Stanley Motor, 500 million worth. They're also the third largest shareholder in Purity Bakeries, 25 million worth of that. They're second largest shareholder in Epley Caribbean Property Fund, 300 and just under 400 million worth. And they also have a small stake in Productive Business Solutions, which is also a Musson affiliated company. So I guess that makes sense. But yeah, they invest in the Jamaica Stock Exchange. And their portfolio, they actually show that their portfolio, this is their audited report I'm sharing. So in December 2022, they said the stock account was valued at just under 600 million. And then a year later, it was valued at just under 1 billion. I mean, I don't know. Part of this, I guess, they may have added money to it too. But yeah, they have a stock portfolio that they can use, or that they're willing to buy stocks on the Jamaica Stock Exchange. So yeah. And let's see, what other thing I found out was that, so with the insurance business, what you want is to, what you don't want is that you have to maintain certain ratios. So there are different ways to say, like, it's essentially saying how healthy that insurance company is, like how easily can it, like, say for example, we mentioned where some black swan event, wicked event just knocks out does a lot of damage. I mean, in the case of GENAC, motor insurance, so it just does a lot of damage to vehicles, and GENAC has to suddenly pay out way more claims than usual. You want to make sure that GENAC is financially sound, that it could pay those out. Like, what if, for example, say it has the investments, but the investments couldn't be sold very quickly to then cover the claims? You don't want an issue where someone is due a claim, like they legally they are saying, hey, I should be able to get the money. Like, I qualify for this. I've proven that I didn't steal my car. Someone stole it. Please give me my money. But then GENAC, you don't want a position where GENAC is like, yo, boss, we can't pay, bro. Like, you have to go, you have to go.
Yeah,
Wait
facts.
till. So to avoid things like that, like, even, you want to avoid things like that. You want the FinSAC essentially helps to regulate the insurance industry. And I guess in different countries, they'll have their different regulatory bodies or whatever to say, hey, do you have enough money that in the event some bad event happens, you can pay the people that you are supposed to pay? Like, you have signed a contract to say, yo, I can pay you. So there's something called a minimum capital test. And in Jamaica, that's about 150%. So my understanding, this is a oversimplification, but say GENAC has possible claims of 100 million Jamaican, and they have, it's almost like they have enough, they have, well, the 150%. So they would have 100% would be 100 million, the 50% would be 150 million. So they have 150 million so that they could essentially cover that 100 million and still have some left after. So it's an oversimplification, but essentially you want the insurance companies are regulated so that their ratios meet certain targets to say, hey, you can comfortably cover those claims. And I remember, even I think when I
Is that the
got
same for I think that's the same for banking too. So I think there's I can't remember exactly what it's called. I know somebody else said it recently, but there's a minimum amount that banks need to have in cash just in case. And we've seen it in the US. A lot of banks filing for bankruptcy, but that's
yeah.
because a lot of people are just, they want their money now, and the banks have already, invested their, because as a person, if I bank with Scotia, right, and let's say I have $100,000 in my bank account, it's not sitting in the account. Scotia takes that money and lends it out to different people, probably even the central bank, BOJ, right, just to gain interest on it. That's how they make money. So they take your money and they invest it. But let's say 1 million people in Jamaica suddenly need back that 100,000, right? That then poses a problem because Scotia can't just find that money just like that, right? They have to do a little bit more just to be able to find that money. So, yeah, Silicon Valley Bank. That's
It was the
how they cut.
16th largest US bank before it collapsed. I think essentially they had money, but like it's cash flow issues, because like you can have certain
Exactly.
investments, but sometimes what if you can't sell the investment at the time? Like, suppose it was a stock or a bond, and even though at that time it was valued at a certain price, at $5, at the current time, the amount of people that would want to buy it only would buy it at $3 or $2.05. So it's like you're making a big loss.
Exactly.
So yeah.
And the thing is, suppose a black swan event happens like COVID, and a lot of people are probably laid off and they need to be, pulling money from their accounts. Then that poses a problem. And that is quite necessary in insurance, because the purpose of insurance is capital protection. So just in case something happens, and if, let's say, something like an earthquake happens, right, and a bunch of people's cars are swallowed up or something, just some foolishness. But for GENAC, just in case, like some black swan event happens or something, and a lot of cars get damaged since they're exposed to cars, then of course they're going to have to need to figure out payments. So I guess that's why those things are stipulated. That's why those things are in place, just in case. So yeah.
Yeah.
See,
So yeah.
wow. I guess you're looking through Silicon Valley Bank, and that was such an I think I watched, there's a video on YouTube about it. And that's what made me realize, after a lot of these, major financial crises, look at the housing crisis back in '08, '07, '08, and so on. A lot of things have been put in place to protect people like us,
Mm-hmm.
because anything can happen.
Yeah,
So,
you don't
yeah.
want another FinSac era. But yeah, so that's some of the things that I think it's important to understand in like the how GENAC makes money from the insurance business. And in terms of the what's going on in the ecosystem of the company, they remember I mentioned before that insurance companies essentially have insurance, which is reinsurance. What a lot of the different tie-ups in these different companies have been saying is that the cost of reinsurance has been rising. And it kind of makes sense because globally interest rates were at highs, like say, like say 5-10 year highs. And essentially what that is saying is that to the insurance, so if there is an insurance company, says company, Thaon's company, he GENAC approaches Thaon's company and says, yo, we would like to get some insurance for some of these claims that these people, or some of these contracts that we've written for these people, just in case they end up claiming the money. Thaon, the rate of return that GENAC could give that person could be, suppose Thaon's company, or suppose GENAC is giving Thaon's company a 10% return on the investment. So if Thaon's company was to lend GENAC $1 million US, GENAC would say, "Yo, we're gonna give you back $100K US plus your principal." But so there's a risk in that though, because what if GENAC starts to have issues with their business? There's risk to that. Versus, and then that company, Thaon's company, is deciding, "Yo, what if I don't lend to Thaon's company? What if I lend to someone else? Or what if I, for example, put my money in much lower risky stuff? Like generally what's regarded as low risk would be like government bonds, things like the US government bonds, where it could be giving me a similar return, or maybe even slightly less return than the 10%, maybe 8%, but there's much lower risk. I'd be willing to, like, would you rather take 10% with high risk or moderate risk versus 8% with low risk? So essentially what they were seeing was that it was getting harder. The insurance companies in Jamaica and other globally too are saying, hey, it's getting harder for us to get insurance essentially. And because of that, if you think supply and demand, if there's less supply of the money that we can use, there's going to be, and there's high demand, is going to be a rise in the cost. So essentially the amount or spread, because remember, they have to, every contract an insurance company writes, they have to factor in, if they're getting reinsurance from it, they have to factor in that in terms of the pricing that they give you. So it's not like, yo, they sell you a contract worth 100K and they get to keep all of that 100K. Depending on the ratio, sometimes they only get to keep 50K of that. Sometimes they only get to keep 20K of that. They only get to keep a percentage depending on how much, whatever contract they have with their reinsurer. So what was starting to happen was that because there was less reinsurance money out there, so there's less supply, and there was still a high amount of demand, or say it's the same amount of demand, the cost went up. So it's like they're essentially the profit cut that insurance companies could make from going to the reinsurance money was less. So it's like their margins were essentially getting squeezed. And there's other things to factor in too, because things like hurricanes, remember, based on our location in the Caribbean, we are in the path of a lot of these hurricanes. And if these hurricanes could damage the cars, and we mentioned GENAC, remember, is heavily exposed in the motor insurance or vehicles in general. If a wicked hurricane was to come, God forbid, then GENAC could face a lot of claims. And so an insurance company, suppose they're looking at, I could either lend the money to GENAC, but then GENAC is in these countries, and then these countries could get hit by these really bad hurricanes I'm seeing on TV. Or what if I lend to this other country, which doesn't have hurricanes, doesn't have these things? Maybe they have some other stuff, but I'm less scared of that happening. So you had that money sometimes shifting away. So essentially what that was saying was that the cost of insurance was likely to go up because GENAC and other insurance companies have to factor that in because they're saying our costs are rising. So we're going to have to raise your price. Like, yeah, we can absorb some of it, but we can't absorb all of it. We still have to be profitable. And so
Exactly.
the high ups of the company acknowledge it. PB Scott, chairman of the company, he said in a Gleaner article September 2023, he was saying that the biggest issue for the company was tightening of the reinsurance market. You're saying it correlates to capital available to be put into reinsurance funds. Less money is available, but we have exceptional relationships with our reinsurance partners. He says General Accident is in a fortunate position in that we expect to expand our insurance business in spite of reinsurance capacity shrinking. And we will see that in the next 18 months. So, yeah, that's kind of what's going on in the reinsurance or in the insurance industry. Hopefully, with interest rates being lowered, you may see, hopefully, that will try to improve because then they're like, okay, maybe we're willing to lend to these more risky assets because we kind of get as good a return in the non-risky assets or lower risky assets. And just to mention too, like hurricanes, uh, the this hurricane season, it's still going on.
Very
It
active.
was
We have a
one of
hurricane right
the
now. Not
yeah.
hitting Jamaica, but Cuba. I think there's a hurricane.
Mm-hmm.
Is it Oscar?
Yeah. So if you look at, I did some analysis. Like
Yeah.
I think it was
Bahamas
was
again.
it
Wow.
Milton or one of the most recent hurricanes was the fastest I think a hurricane has ever become a Category 5.
Yeah.
Was it
Yeah.
Milton
It was either Milton or Helen, or it's one
or
of them.
yeah? And if you look at just the
I
amount
think it's,
of
yeah, it's Milton.
it's Milton, okay. So if you look at just the amount of major category hurricanes, this is 2024 and this is ongoing. What I saw was that we have had 7 versus 2023, which was 3, 2022, which was 2, 2020 was 6, 2019 was 3. So we're having major hurricanes. We're having a high amount of hurricanes because at the time that I did this analysis, 2024, we had 15 hurricanes. And in 2020, for example, 2019, we had 6, 2021, we had 7, 2022, we had 6. So we're getting more hurricanes, stronger hurricanes, and there's a lot of damage. So it makes sense that, hey, maybe we don't really, the reinsurance company just have to think practically. Like, why would you, it's going to be harder because, like, why would you lend here where there's a risk that, because remember, at the end of the day, insurance, you want to reduce your risk. You don't
Mm-hmm.
want the payout to happen. You want, or no, you don't want it. You don't want the thing that triggers the payout to happen. You
Yeah.
want, because you're trying to lower your risk. You want to lend to people that are not super risky. So that's kind of happening. The hurricanes, the amount of hurricanes that we're having, how severe they are, it's going to kind of make it hard. I mean, GENAC says that, we have really good partnerships, but they're going to have to navigate that issue. The other thing to look at is their competitors. There are a lot of different competitors. A lot of them are listed. So the
Mm-hmm.
Guardian, Grace Kennedy, Sagicor, Key Insurance, Advantage General, BCIC, Jamaica, JN General Insurance, ICWI. Who do you use as your car insurance?
GK.
GK. Okay.
GKGI. General
Yeah,
Insurance.
I
Yeah.
use ICWI.
Mm-hmm. I have a
Yeah,
couple of
but
friends that use like Advantage and yeah.
mm, hmm and so I was doing some comparisons. I just meant I should have added Key Insurance here, but something that I should mention: Jamaica. So there was an article that came out not too long ago about BCIC working on actually buying Jamaican Jamaica National General Insurance or JNGI,
Mm-hmm.
and their financials are actually public, even though they're not public companies. And I was trying to do like to kind of compare to say, yo, how does GNAC compare to these? So in terms of insurance revenue, GNAC is actually smaller than JN and BCIC in terms of the amount of revenue they wrote. For this was for 2023. So GNAC did 6.7 billion.
Mm-hmm.
JN did 8.4. BCIC did 16 billion. But important thing, GEN is actually not profitable for 2023. They're actually in losses. They lost 500 million Jamaican. So even though you're making more revenue, you're unprofitable. It's almost like a complete reverse of GNAC. Less revenues, but similar profit. Like GNAC made 500 million for 2023.
Yeah.
And BCIC, even though, as I said, BCIC has way more revenue, writing much more insurance contracts. GNAC was actually more profitable than BCIC. BCIC
Crazy.
made 430 mil. It's almost like, remember, we just recorded, you guys should check out our dollar episode. We're looking at difference between like Dollar Financial, ISP, Access Financials, and I was comparing the loan book to the profitability. Yeah, you have more revenue, more loan book and stuff like that. But is your loan book that good? Because if you're not they're making much higher profit margins, or they're profitable. Remember, JN isn't profitable, or JN's general insurance arm isn't profitable. So I found that kind of interesting to see, because I guess BCIC is essentially saying, hey, we are willing to buy JN, and then we're going to try to, I guess, turn around the business and stuff like that. We can try to apply that. But there is it's just something to mention that there is some, I guess, consolidation going on in the industry. I don't know if GENAC is looking or would look to any of their other competitors to buy them. But there are a lot of players in the general insurance market. All of them are going to be faced with a lot of the issues. But if you look at it, a lot of them have certain connections. Because I look at how, big GK is. So there's some big dogs in the space. The Grace Kennedy, Guardian, Guardian with a NCB connection, NCB being the largest shareholder, Guardian. And I was mentioning the other thing to remember is that we'll talk about it when we get to the shareholder list, but GENAC is a part of the Musson group of companies. So you can't just think of GENAC alone. You have to think GENAC has connections with a lot of companies. So they're connected to AS Bryden, they're connected to Canopy Insurance, which is Canopy is between Grace, I think it's 50-50 between Grace Kennedy and Musson. GENAC is connected to Seprad, because the largest shareholder in Seprad is also the largest shareholder in GENAC. PBS, Productive Business Solutions, the largest shareholder in PBS, is the largest shareholder in GENAC. So yeah, this is a part of, you have to think of it as that ecosystem of Musson related companies. So I wouldn't be surprised that GENAC offers some of their insurance products. Maybe Seprad workers, they're like, hey, if you want to get car insurance, why don't go GENAC?
Yeah.
Because why would I want you to go Key Insurance or Advantage General or BCIC and pay them versus you just pay me? So it's almost like the Musson, yeah, because my money.
Yeah, exactly.
So yeah. And some of the plans that they have mentioned now, there is a possibility of them actually issuing shares or doing an equity raise to raise some money. So they were previously listed on the junior market of the Jamaica Stock Exchange. One of the limits of the junior market is that, well, at the time of recording, you can only raise 500 million Jamaican dollars. And I say only, like, oh, only that. But you can raise 500 million Jamaican dollars. But GENAC had essentially already raised about that amount of money. So they couldn't really raise any more money. And they already had been listed for more than 10 years. So they, I think, had essentially lost their tax break, their income tax break from being on the junior market. Yeah. So migrating to the junior market, or sorry, migrating from the junior market to the main market costs money, because you actually pay more in fees. So it's not like, you just do it as a style thing. But they actually migrated to the main market September 2023. Oops. Yeah. So they migrated to the market September 2023. And one of the things that we're wondering was that, hey, is it that you guys are looking to raise more money? Because it don't make sense you just pay more fees just to say, yo, we're on the main market, you have a reason for doing that.
Yeah.
And they actually mentioned stuff, I think it was at their shareholder meeting. So the chairman, PB Scott, had said that they had no interest in being diluted. And they had said at the time the stock was trading at like $4 or $5. He was saying that we could raise money, but the option doesn't exist on the junior market, and we wouldn't raise money at the price which is today. He was saying essentially that the stock price was low and he'd rather raise money at a higher valuation. He also thought that the market at the time wouldn't be willing to take up the wouldn't be so eager to buy into a possible raise. But more recently, they actually they migrated to the main market in the 2023, and more recently they have their shareholder meeting, and at the shareholder meeting they are asking to actually have the ability to issue or create 300 million more shares. And they said they also want the ability to be able to have 3 more directors in the company. So essentially, but one of the other things, so what I was saying is that means to me that they're willing to issue shares to a party. So it's either they could do a secondary offering, either a rights issue or an APO, an additional public offering. I don't want to get into differences between those. We have a whole series on rights issue versus APO. I will try to link it so you guys can check it out. But it's either they do a secondary offering, or one of the things is that I noticed if they were going to do an APO, one of the things you have to do when you do an APO is you have to remove the what you call preemptive rights that shareholders have. So if you're doing a rights issue, you don't have to do that, because essentially what you're saying is, you as a shareholder, if we're going to create new shares in the company, you have the right to first refusal. You should have the first right to buy those shares. And only if you say, I don't want to buy them, then someone else possibly outside the company could buy it, and you could then get diluted. So if you're going to do an APO, you'd have had to do that. And you'd have had to have the shareholder meeting. But when they had the shareholder meeting notice, there's no mention of them wanting to remove the preemptive rights. So that means it's either a rights issue, or one of the things is that if you issue shares for what they call non-cash considerations, so either equity in a business, for example, then you don't have to remove preemptive rights. So it's to me, it's either a rights issue, or they're going to issue shares to another party. And the fact that they're bringing in, they said they want to be able to add in 3 more directors. Those could be 3 directors from another company. So it could be that what they're saying is, hey, there's a company that we want to acquire. Maybe we pay some cash for the company. So say we do, okay, $1 million, $2 million, $1 million US, $2 million US, whatever. We buy the business or buy a part of the business. And then just like how they did, because remember, we've seen them buy businesses. They bought Motor One in Trinidad. They bought that, I think, for cash. But suppose they're like, okay, it's going to be a mixture of cash and equity. So we spend the 2 million US, 3 million US.
Too, but yeah, I agree.
And then we also issue some new shares to the people who own that company that we want to buy in, because we'll talk about it, but they said they're looking to go into other countries. So it could be that, hey, we want to go into this other country that there's an insurance business there. The owners of that business, they want to kind of sell the business, retire. They are saying, hey, we would take some cash now, and also we would like to be owners in GENAC, because GENAC, in buying that company, that insurance company, company A, whatever, that company would then, GENAC would be a larger company. And then it would be almost like a part of that overall ecosystem of insurance companies. So that would be, that's essentially, I guess, that's my guess, that essentially they are looking to acquire for another acquisition, essentially. And if you look at it, look at the, remember I mentioned the ecosystem point about the Musson.
Yeah.
Think about who else is in that Musson ecosystem. So Seprad, Seprad bought AS Bryden, I think, in 2022. That was a major acquisition. And then AS Bryden recently bought CPJ. So these guys are really big on acquisitions. So it likely is probably an acquisition. They're going to buy some insurance company. I don't know where the company is. And they have mentioned that they really do want to expand into other countries. Like they said, significant growth is going to come from, this is quoted from, I think, PB Scott, the chairman. This was in a Gleaner article, September 2023. He was saying significant growth is going to come from outside of Jamaica. So he says, we want to develop a regional business which will continue to grow. And I think they've mentioned, for example, looking into things like Barbados, Guyana. Everybody loves Guyana now. And yeah, I mean, even just some of the growth prospects, like there was an article, this Gleaner article, general accident undervalued by the market. He was saying with the network that they have, this company has the potential to grow to a 300 million US dollar business. 300 million. Right now, I think the market at the current valuation of the market, that's like a 8x. He's saying like 8 times more valuable. I don't know if they'll reach that, but yeah, these guys
Well,
seem
only way to do that is the acquisitions. So,
yeah, a big acquisitions we have a big part of that. Yeah,
yeah.
yeah. So I was doing some. Let's go into like some of the, I guess, the financials. So 2023 was a pretty good year for them. They let's see. So their insurance business, they wrote about 8.6 billion in insurance. They got insurance revenue, and also there was this line that I highlighted: the net investment income. Remember, I said the big part about the insurance business. You take the money, yeah, you have money to cover claims if they come, but you want to invest the money to grow the money. So they actually
Yeah.
made about 340 million from the investment income, which actually is about, say, about half of their insurance service revenue. So the amount of money that they actually made from the insurance business itself was about 700 million, and around 340 mil was made from their actual investments. So they do make money from their investments, and well, 2023 was actually a bit less than 2022. 2022 was a really good year for them. They made
Yeah, I remember
730.
2022 being pretty
Yeah,
good.
made 730 mil. 2023 they made 540 mil. So far this year, I mean, at the time of recording, we only have the first 6 months. They're not doing as hot. They did about 150 million. So if you annualize that, they continue at the same track, they'd make about 300 million, which would be less than. So their profits may be declining. So maybe that's what they're saying. Hey, we need an acquisition to kind of help bolster up.
Yeah.
At the current, well, let me see. Right now, I think the price is around $7 or so. If you use the 2023 earnings, that's actually a price to earnings ratio, a PE of 13.
I mean, to be honest, when you said 2022, sorry, last year was probably their, or the year before. It was probably one of their worst years, to be honest, because they've been
2023.
making, yeah. Like
Mm.
if you look at previous years, like
Mm-hmm.
2021, 2020, 2019, they made a lot more money
Yeah.
than so, they have been falling off a bit.
Yeah.
So, yeah.
Wait, no,
Yeah.
yeah, 2019, I say 558 million. 2020 was 242. 2021, 250. But
Oh,
yeah,
well, yeah.
yeah,
I
but
mean,
yeah.
yeah, the acquisition still, I do think they're definitely gunning for an acquisition.
Mm-hmm.
Uh, any thoughts on any other companies that you can? I mean, it would likely be a regional insurance company
Mm-hmm.
that they go for, just like Motor One, which they've done before. So, and I'm assuming it would be in the similar type industry as,
Mm-hmm.
of course,
General
general
insurance. Yeah.
insurance. hmm
Mm-hmm.
I don't know. I guess we'll
No.
see.
Yeah. So I guess it'll be interesting, like, to see what the share at the what the at the shareholder meeting coming up. Maybe kind of
Yeah.
ask them a question about it. Yeah. Other thing, management. So management does actually own shares. I mean, if you look at we mentioned before, the number one shareholder, Musson Jamaica Limited, they own 80% of the company, which is the maximum that they can own.
Mm,
And the second largest shareholder, Mayberry Jamaican Equities, Mayberry actually increased their stake in the GENAC by 8% within the quarter two this year. And then actually,
mm,
interestingly, Mayberry had them on their investor briefing recently. So
yeah.
is that a sign? So Mayberry is buying. Mayberry is their
You
financial
realize
advisor.
every single time we record a podcast episode, we call Mayberry's name. You just say it like they're everywhere. They're literally everywhere. These guys have
Mm-hmm.
shaped the junior market.
Mm-hmm.
Yeah.
But I don't. That kind of sound like a sign to me. So Mayberry is buying, um, and they brought on the CEO. I think Sharon Donaldson brought on the CEO to speak about the business. They are now getting approval to issue some shares, increase the amount of directors. Maybe they bring on 3 directors from another company that they buy.
Mm-hmm.
Um, if I were to guess, the Mayberry would likely be their broker for that transaction.
Yeah.
You know, yeah.
Yeah.
And even say Chris Berry directly owns a decent amount of shares. He's the eighth largest shareholder in GENAC. And say Charles Donaldson Levine, she's the maybe CEO or managing director. She's the 10th largest shareholder.
We like
So
to see
management
that.
does own shares. Yeah,
Big up
Musson,
Sharon.
Sharon Donaldson, their advisors own shares. Even another investment fund, QWI. So management does own shares in the company.
Is
And if
QWI
you even,
selling? Mm.
yeah, they actually sold about 20% that quarter. Mm,
MJE buying more. I wonder if
mm,
they know if something's coming. I
yeah,
always
we'll
like to
see.
see that, I always like to see that.
Mm. Even just look at how the stock has traded. From like quarter 4 last year, it was trading like $4, $5. Now today it was at, well, the last trading it was at $6, but most of the times it's a very tightly held stock. What that's like if you look at just the Q, it's
Mm-hmm.
very hard. It's pretty the buy Q is pretty weak too, but yeah, it's not very easy to get units in the company. Remember the largest shareholder owns the max they can own 80%. The top 10 owns almost 90% of the company. So
Yeah.
if you have a company like this, they announce, hey, we've acquired this insurance business in this country. Um, that maybe drop some nice
Mm-hmm.
reports. Um, yeah,
See like a
it's gonna be
five to
hard
one
to get.
stock split.
You think
See
that's
them.
split?
No, I don't think it's. I don't think PB Scott would want to split the stock. Not right
Mm,
now, anyway. Maybe closer
mm-hmm.
to $10. Maybe
Mm,
once it like reaches $10 as like a floor, then yeah, I think he'd
mm.
split it.
A floor or a ceiling?
No, a floor, meaning that it can't go below $10. So it consistently trades above $10. Then
Oh,
yeah, I think he would
okay.
consider splitting the stock.
Mm, okay.
But I guess we'll see. Um, I do think I do think an acquisition is coming though. The signs are there. The signs are literally all over like they're written. So, and I
Mm,
think that's all it would need to reinvigorate the stock.
mm-hmm.
Let's
Yeah,
see.
what you say, one to watch.
One to watch. We always say that. Love that.
Mm-hmm.
One to watch. Guys, if you love this episode, drop a like if you really liked it. Yeah. More than just like, loved it. Yeah. Subscribe. We would love that. We'd really appreciate that. But
Oh
another
yeah, and
one to watch.
you guys can comment below which stock you'd like us to possibly review next. You can comment
Mm-hmm.
below. Let us know.
Let us know. Limitless. Out.
Peace.